SOFI Technologies just released earnings this morning, and they beat every single metric in Q4, and yet they're down. At one point, they were down more than 15%. What just happened? As I predicted, SOFI would be down, but not for the reasons that I thought. So in my previous video, I had thought that SOFI Technologies would be down because they had all these new member ads, but then not enough product ads. And I thought that bears would jump on this lack of products per member, and which would basically kind of indicate falsely that members are joining the platform but not using other products. However, I could not have been more wrong. On the earnings call, Anthony Noto legit, it's almost like he was calling me out, calling me a doofus, saying, he mentioned like 2, 3, 4 times that members, especially new members, when they join, they actually have a really high likelihood of not only getting one product, but getting a next product within the month. I have the stats right here. He says that members, 40% of new members open another product within 30 days. Within 30 days. So it's like he was calling me an idiot because of how many times he said it. But I just want to talk about this earnings call and why I think it makes me even more bullish, even though the street did not like the forward guidance at all. Like at all. So the first thing is just Q4, which is really good, right? They had 700,000 plus member ads, 1.1 million new products, right? So again, 1.1 million new products. That means more than out of the 700,000 new member ads, on average, each one of those had a little bit more than one product, a little bit less than 1.5 products. So yeah, that's way different from what I said previously when I thought that members would take some time to get new products. Instead, members were getting new products way quicker than I expected. So that's amazing. But then they beat on earnings, revenue, everything was wonderful. And then forward guidance hit. And then poop hit the fan, and then everyone was sad, right? So why is it that, in my opinion, I think that forward guidance actually makes me more bullish? And what do I think that people are overlooking in this forward guidance? So a lot of people were just clinging on to this earnings per share, right? People were clinging on to this forward guidance on earnings, and they were saying that's not enough earnings, that's bad, so that's why you deserve the 15% drop. Now I actually think it's amazing the way that's explained. Obviously I was like, what the heck just happened during the before the earnings call, but then the way management kind of explained it, they were basically saying we're shifting from just trying to get earnings, we're shifting into growth mode. But unlike other growth companies that are actually negative, or they're kind of at this growth at all cost type mindset, I believe that SOFI Technologies is actually aiming for a growth at no cost mindset, kind of. What I mean by that is they're trying to grow as much as possible, only using the free funds that they have, or like the extra funds that they have. In other words, they're trying to grow while maintaining this steady income, this steady earnings. But with anything above that steady earnings, they're trying to grow and try to get as much market share as possible, and try to steal as much market share as possible while doing it safely. They're not they're not risking the farm in order to grow. They're doing it really safely because I think that they are a very risk adverse management. If you look at what they say during the call, they also mentioned something about how they might, even in the future, even though them originating their own loans actually gives them more profit, and they have really high credit score users and customers, Anthony Noto states, he says something along the lines of, regarding the loan platform business, maybe in the future we should push all our lending to the loan platform business. It's a lighter balance sheet, less risk, high margin. So they're really aiming for just getting as much low-hanging fruit as possible. And it really shows you how risk averse management is, and how they're really aiming to just be. It's wonderful because I've mentioned the black swan so many times, and it seems like management is just really ingrained just to be as not risky as possible. And even when they talk about likes of Robinhood or Firm or all those other competitors, Anthony Noto mentions, I forget in what interview, but he mentioned in a few interviews talking about how Robinhood is going too fast for their own good. And this really does kind of illustrate, this entire earnings call really does kind of illustrate Anthony Noto's like his mindset on how like he want to grow, but not at all, like not risk the farm, right? You don't want to risk anything, but you want to grow as much and just get as much low-hanging fruit as possible. So do it safely. And I think that that's really good, because it's just a company that you can invest in. You don't have to worry too much that like like tomorrow another Japan carry trade happens and then SoFi somehow loses half their market cap. Nvidia losing like, what was that, like 13 or 15% market cap today, $600 billion. How many SoFis is that? How many SoFis is that? It lost at one point, it lost $600 billion in market cap. Absolutely ridiculous. But throughout the entire earnings call, SoFi, Anthony Noto, Chris Lapointe, they kind of mentioned how they really like this referral business, and because it's really high margin, it's low risk, and they're kind of acting as this brokerage, and they don't have to shoulder any of the burdens of holding these loans or anything like that. And I heard a quote by I watched Danny Deals or Hurricane Lopez. I mentioned his channel a few times, but he said something that really, like, it was enlightening, right? He basically said SoFi isn't only selling services to their members; they're basically a marketplace for customers, for other people, for other businesses. And that was like, that totally makes sense, right? They're basically selling this entire cohort of high quality customers that are that are very likely to pay back their loans. Even in the earnings call, when someone says, how do you reject loans? Are they just like, for the loans that you reject and you give to the loan platform business, is it that all you do is you get the people with bad credit scores and bad credit quality and then give those to the loan platform business? And Noto says specifically, even the loans that we reject are not bad quality. It's just that there's certain circumstances in which we don't feel as safe shouldering the burden of those loans. And then in those cases, even though they're really high credit score or high credit quality people, they will reject those people. So that tells you how risk adverse SoFi is. And I think that that's really important in this specific environment. It just feels like the market is so fragile right now. It feels so fragile. It feels like it could break at any moment. Like, look at today. What happened? What happened? The Nasdaq dropped how many points? Because China released the DeepSeek, right? Think about the Japan carry trade. So like, it tells you how quick the market will turn. Like, it'll just turn on a dime, just like that, and like the market either like flashes up or flashes down. Having a management that's always has risk in mind and making sure that their investors are safe is something really important, especially in this environment. Another thing that bears were actually noting was that, well, rightfully so, right? I also thought this as well, but they said that, well, I mean, SoFi, they're guiding for 2025 to have only gained 2.8 million new customers. Well, that's just about, on average, 700,000 customers per quarter, and Q4, that's exactly how many customers we or SoFi gained in Q4. So does that mean that the rate at which we're obtaining customers is stagnating? Is SoFi no longer cool? Like, what's happening? In my opinion, I think the reason they're doing that is because they really want to start this flywheel, right? We haven't really seen the flywheel in action yet, but it really does seem like SoFi is really going for customers, their existing customers, to use more products. In the earnings call, Noto also notes that for financial services, the revenue per product for this year went from $59 per product to $81 per product, right? So that's like some 30% I think, and $81 per product per customer. So what they're trying to do, in my opinion, is they're, instead of spending more money just trying to get more customers who are using one or two products, they're trying to get more customers, or they're trying to get more of their existing customers to use more of their products. Let's look at this. Look at this, right? Look how many products they have, right? So if you join based off of SoFi Money, oh, what happened? If you join based off of SoFi Money, then you only have $59 from that customer. That 59 is now 81 as of 2024, right? And how much more money can you earn from that single customer. Rather than just focusing on getting new customers that are only going to use 1 or 2 products, why not try to get your existing products to use maybe 6 or 7 products, 8 or 9 products, right? Then you can get that one customer will account for so much more revenue. Additionally, it doesn't cost as much money to advertise to get those existing customers to use new products as it does to get customers that aren't in your ecosystem to join your ecosystem, right? So I think that they're actually focusing more on getting customers to use new products and create new products for those existing customers to use than they are focusing on just trying to poach and get new customers. I think that there's just more ROI, and I think that SoFi also believes that there's more ROI in getting your existing customers to use more products than there is in getting new product than there is in trying to find new customers. Another thing I really wanted to note was I was actually wondering throughout the earnings call, is SoFi going into SMB banking? I feel like they're trying to hit that SMB banking, like the customers that are interested in SMB banking without actually doing SMB banking. They talk a lot about trying to have like low risk, right, high reward, and low hanging fruit. It's the type of mentality I get from management from listening to the earnings call. They mentioned that they already have the infrastructure for SMB banking. The other thing that makes me think that they're going into SMB banking is they're actually rolling out SoFi Plus, which is going to be like some $10 a month membership thing, where you will get all the benefits of SoFi Plus members, like the high yield savings and all these other benefits that currently aren't available for people that are self-employed, because you need to have some type of direct deposit into SoFi in order to qualify for those things. But now that they have this alternative route that you can take, the $10 a month, you'll get more of the people that are self-employed to join SoFi. And the people that are self-employed, think about it, those are basically just SMB businesses, right? Those are just SMB, those are just small, medium-sized businesses. So are they trying to appeal to more of that type of cohort, more of that type of customer? That's possible, right? And maybe for now they won't actually underwrite the loans, but eventually maybe they think that it's too risky right now, but maybe in the future when interest rates go down a little bit, when the economy is more robust, maybe they will start underwriting those SMB loans. Those are all just things that I thought of during the earnings call. Now the last thing I wanted to talk about is this. It says here, I don't know if I can click, right? But down here, can you see my mouse? Oh, now you can see my mouse. Okay. The last thing I wanted to talk about is this right here. So it says that Q1 guidance of 2025 is 3 cents, right? 3 cents earnings per share, diluted EPS. But at the same time, it also says that full year 2025 is 25 cents to 27 cents, right? So that means that if Q1 you have 3 cents per share, earnings per share, that means in the latter 3 quarters, you'll have some 22 to 24 cents per share. I don't know how else to calculate that, but in 3 quarters, you're gonna raise from 3 cents to, let's say it goes 5, 7, and then what was that, 10? 5, 7, 10. So let's just say that Q2 is 5 cents, Q3 is 7 cents, and Q4 is 10 cents. Right, that's still 10 cents per share. And then you also have them reiterate that in 2026 they want full year earnings per share to be between 55 cents to 80 cents a share. Hello. Hello. Like that just screams exponential growth in earnings per share, in my opinion. Maybe that's just me. Now that's only if you want more, like, I guess it's somewhat linear growth. But what I think is actually that I think that Q1 and Q2 will be them just trying to get as much market share and as many things as they can as possible. And then afterwards, and at that point, you'll have like maybe a 3 cent earnings per share, maybe a 3 or 4 cent earnings per share again. And then Q3 and Q4 of this year is when they start ramping up and actually increasing their margins without actually having to focus too much time and energy and money on growth, right? Whereas Q1 and Q2 is just going to be pure like growth without risk. is my opinion. So yeah, so that's just my thoughts on the earnings call. I just think that people are overlooking this forward guidance and just pushing it aside, when I think that it's actually, there's so many things that are there if you read between the lines. And there's another thing that Hurricane Lopez also mentions, which is basically that you can't become a top 10 financial institution without growing, right? I mean, yeah, SoFi they could just keep increasing their earnings per share, but they wouldn't be growing to the status of being a top 10 financial institution if they didn't try to grow all the markets. They need to put their hands in every single possible cookie jar that they can. And 2025 is SoFi increasing their offerings and increasing their reach in every single possible market that they can, so that they can grow as much as possible and achieve that top 10 financial institution status. So those are my thoughts on earnings call. Those are my thoughts on SoFi. I'm still hyper bullish, super bullish. Yep, that's it. Have a good day. Bye.